I'm Adam Willems, lead reporter at the FR.
I'm Jamie Twiss, Chief Executive Officer of Beforepay.
Thank you, Jamie, for being here.
Thank you. It's great to be here.
So I'm wondering if you could explain what Beforepay does.
So Beforepay is an Australian fintech that does two things. Outside Australia, we build credit risk decisioning software using alternative data and data science, as well as limit setting algorithms and other forms of data science-driven lending tools. Then within Australia, we use those same tools to lend directly off our balance sheet. We've done over 4 million loans powered by artificial intelligence over the last 4 years.
That's really interesting. So I'd love to hear why there's this sort of bifurcated model and to what extent the non-Australian infrastructure is able to function outside of an Australian compliance environment.
Yeah, so we were founded as a mission-driven organization, very explicitly with the goal of creating safer and more affordable lending products. In order to provide affordable lending products, we have to run very, very efficiently. So we've built our own platform. We're currently issuing about 35,000 loans a week with 33 employees. So we've got a high level of efficiency.
Yeah.
But then we really had to invest quite a lot in the IP required to get to good credit outcomes. And once we built that engine, we started getting a lot of inbound interest from offshore lenders who wanted to know if they could benefit from some of that IP and the data science capabilities sitting behind it. We absolutely do have to tailor the model and the data science tools to different markets. So the nature of the data available is always different. Customer behavior is different, both consumer and retail. What individual lenders, banks, and other institutions are looking for varies as well. And so what we do is we take the core model and then we'll create local instances of it in different markets.
That's quite the business model. It seems like a semi-long-winded way to get to an efficient and affordable.
Yeah, so we very much started with a very specific mission. Where we realized was the best way to deliver on that mission was by providing these AI-powered lending tools more broadly. Because there's so many more lenders out there that are touching consumers that would take us years or decades to get to ourselves.
Sure.
So we do like to work for those third-party bank partners and other lenders.
Sure, and how mission-driven are those partners compared to you, I guess?
So we'll only work with a lender where we see at least a commitment to doing the right thing by the customer. So we'll never work with a predatory lender or someone who relies on tricks and traps or anything like that. My personal belief is that by providing better AI-powered risk management tools, we can actually drive a lot of financial inclusion by helping people who may not be have access to credit through traditional credit scoring and traditional scorecard-based models. But if you use alternative data and put a lot of smart data science around it, they're actually quite credit-worthy people who deserve financial inclusion and get access to credit that way.
Okay. You mentioned AI in lending, and AI is definitely all of the buzz.
Yeah.
How much of a there is there versus smoke and mirrors?
Yeah, so there are certainly a lot of people who are doing really interesting work in AI and lending, and I number us among that. And then the people where there's not quite as much substance behind it. I think a lot of the focus on generative AI is less relevant for lending. So we use some of that for vectorization of incoming data, for natural language processing. But any kind of generative AI is a neural network-based model, which means it's non-explainable, which means it's not appropriate for lending. So I think people who know what they're talking about will generally pull back to some sort of machine learning model, gradient boosting algorithms, and that's at the core of what we do, as well as some surface fitting and other techniques.
Okay, so where do you see AI in lending sort of manifesting or bubbling up to the surface successfully?
Yeah, I'd say where it's really useful in two ways. One is processing large volumes of structured and unstructured data in an efficient way. So we will ingest thousands and thousands of data points on each consumer. It can be bank transaction data, but also it could be device data or location data or whatever is appropriate to that product and to that context. Mm-hmm. And AI makes it much more efficient to bring that into a way that you can then train on it. And then the second piece of it is actually finding predictive variables and spotting correlations among them. So we test about 50,000 different attributes in our core lending model, and then the AI algorithms select the 400 to 500 attributes which are most predictive out of that, and then the interplay between them as well. And that would never have been possible before the current generation of AI tools.
That makes sense. Right. You can't exactly be connecting the
You'll
dots.
You'll never spot this through any kind of manually built system, or even sort of those regression models that we used to build 10 and 20 years ago.
Totally. My last question is whether there are any questions I haven't asked that you feel like I should have.
Yeah. Well, I think the question that you haven't asked is how much further do we have to go with artificial intelligence and lending? And I think the answer is we can go as far as we as a society feel comfortable with it. So our ability to establish a picture of a customer's not just financial capability, but also their forward-looking prospects, both good and bad, as well as the behavioral elements that are so crucial in determining whether a person or a small business successfully repays a loan. There is a lot more that we can do as data sources come online, as storage and compute get cheaper, and as the level of sophistication around the AI practitioners in the industry continues to increase. The question that we as a society have to ask ourselves is, where do we want to draw the line on that from an inclusion and equality point of view? And that's a really important debate over the coming years.
Right. Well, what's your take on that?
So I think we have an obligation to be as thoughtful as we can about everything that a customer controls. So if someone has taken a set of actions in their recent past, and that's an important part of who they are financially, I think that's a very appropriate thing to bring in. When we look at stuff that's longer dated, or when we look at stuff that is not necessarily something that they have done or have yet done, I think we have to be very, very cautious. In the same way that in other fields, we are careful not to judge people for elements of their identity or what we think they might do. I think we need that same sort of socially responsible approach to financial inclusion and AI-driven credit.
Right. Great. Well, thank you very much for your time.
Thank you for having me.
Yeah, of course.